Hello and welcome to another update video about Link. Link is still following a bullish structure and still one of the better looking charts as well on the larger time frame as well as on the smaller time frame. Today I just want to take a look at the smaller time frame for Link. We are dealing with a situation where the price formed a substantial low on the 13th of January. At least while I record this video, this is the assumption. This assumption will only change should the market break below $19.26, which is the 78.6 retracement of the rally that ended on Friday, after which we saw a pullback. The price formed a higher low. The price held support. I believe we talked about that in one of the previous videos. And, the current interpretation is that wave 5 to the upside has started. Now, the idea is wave 4 bottomed on Monday, the 13th of January. This is quite a substantial low. Surely, I cannot rule out one more low. In this case, however, the price should really not break and sustain below the 50% retracement level. It would certainly challenge the overall bullish assumption. For now, however, we are far away from that level and the market is pushing a little bit higher. At the time of recording, we are about to break above the $27 level, which is a swing high from Monday, but that's not guaranteed yet. So I see two possible pathways for higher prices. Either a directly bullish pathway, as per the white scenario. In this scenario, the market formed a so-called 1-2-1-2 structure. What does that mean? Well, the initial rally is called wave 1 because it's the first wave of the larger 5-wave move in wave 5. Wave 5, based on Elliott wave rules, is a 5-wave move in this case. And we already saw waves 1 and 2. We're now in the third wave, which is the longest, normally the longest wave or part of such a cycle. First ideal target is the $37 level, the 138% Fibonacci extension. But this third wave, oftentimes the third waves develop, let's say, clear microstructures. And you can see that here. So the third wave itself would be a 5-wave pattern to continue that uptrend, idea. And we already saw waves 1 and 2 of wave 3. This here is now the third wave of the third wave. It might very well be that this is already played out when you watch the video. And then overall, the market should move towards $37. But this assumption is only valid as long as the price holds above the Sunday swing low, which formed around $22. Why is this so important? Because based on Elliott wave rules, a wave 2, this small wave 2, must not break below the beginning of wave 1. It's very, very important. It must not break below the beginning of wave 1. Now, what happens if it does that? It can. I mean, it surely can. It can't do that in this scenario, but it could do it technically. So what would that be? I would then track the yellow scenario, which allows for a wider wave 2 correction. It's just a larger correction, leaves a little bit more space. The main question here at the moment is, are we following the more aggressively bullish, directly bullish pathway? Or is it a larger correction, which would still be part of that bullish idea that the market has formed a larger low on Monday, the 13th of January? So that's the key idea here. These two are bullish scenarios. We should get the answer over the coming sessions. If everything fails, the $16.50 level down here is still a key support level for the overall bullish assumption, but then we would have to assume that the fourth wave that presumably bottomed last week is still unfolding. Overall, the focus remains on higher prices, and the $37 to $38 area seems to be a reasonable target area above. That's the update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.